Hello guys, this is HumbleFx. This is the review of the last video. The video I created last time, the landscape version is one. It wasn't clear enough, and people were complaining, so I had to create this one, for it to be clear. Okay, this is the same video last time, so you want to get the knowledge that I shared in that video. This is the video you have to watch. Okay, it is going to explain to you what I just said in the last video, even though the trades we took on that video was live, but now they are played out, so you will see how they played out and also see how prove that this is actually a great opportunity. Now let's go down to boom 1000. Okay, this is price action. If you are looking to learn how to trade the right way, then this is the chance for you. You are at the right place, so consider to subscribe to the channel and also turn on the bell notification and uh and comment on the comment section. Okay, in this place we talked about this in that last video. I talked about this level coming to set down, and look at what we are doing. We have took the first TP and we are going down to the second TP very soon. All right, so this is it. Now, what was I saying in that video? I told you guys that we are going to be learning an important pattern which you might not have seen before. They will not tell you this, but here, if you want to learn this kind of video, then you are going to be learning every of it in this channel. Go ahead and subscribe to the channel, like the video, share to your family and friends, and let's roll it. Now, this is not indicator strategy. This is price action, and it's a simple one as that. Now look at this. I talked about this in the last video where we had the trend. This is the trend, guys. We saw this is the trend. I told you guys this is this is a high here. That's a low, and a low. And you see a high, and a high. This shows us that this is an uptrend. Look at that. It's going like this. It's an uptrend. So what are we expecting? What pattern are we expecting here? All right. This is a reversal pattern that you are learning, so it's very awesome. If anytime you see this pattern on your chart, you have to take full advantage of it. Now look at that. Look at this. This my zone. There is an upward movement here. There's a low here and another high here, so I should expect a low, then another high. But what happened? It did not form that low, rather it broke that low, which is this. It broke this low down here. This is it. So once this low is broken, what do I know? I know that there is a break in market structure. Remember, I'm on 1 minute, I'm on 1 hour time frame, so I see that there is a break in market structure. So what do I expect? Remember, this is the high that was formed earlier, so I should take my set right from this place, and I should expect my TP down to this particular place. See that? So this is a perfect structure, and we took the trade right from that first in the first we took the trade right here in the last video. Okay, but I closed some in profit before I entered a new one right now. All right, so that is very simple and easy. Okay, do you get the point right now? This is 1 hour time frame, and you want to check the trend. You want to know what is the trend, and what do we know that forms a trend? We know that an uptrend is formed by forming a higher high, a higher low, higher high, higher low, higher high, higher low, while a downtrend is formed by a higher low, lower low, lower high, lower low, lower high, lower low, and that is what forms a downtrend. Now we have seen that an uptrend is formed at the left side. We have seen an uptrend is formed here, where we see the low here, higher high, higher low, higher high, higher low, higher high. Now instead of forming a higher low, there's a break of the low here, which is this. Okay, it broke down that low. Then what happens? It came back to this level, this same level we drew here. Okay, so where did we get this level that we drew? First of all, you have to go down to your left. If you go down to your left, you see that we have levels in the left. Yeah, these are important levels in the left. So from there, we got that level we drew, and it's also a confluence to this level here. So that is your entry point, and you can maximize enough profit in that area. You can maximize enough profit in it. So simple and easy. Now let us check on to crash 500. So anytime you see this kind of information, you should know what it is. Let me give you a space example. Let me give you an example in the space so that you see what I'm saying. This is it. We have an uptrend like this, going like this uptrend. You see that this uptrend, guys, uptrend. So now we have seen that there is a level here. There is a level here. There is a level here. So we should expect another market to come down like this and go up. But in a situation whereby instead of coming down, coming down to coming down to form another low and go up, it came and break this low here, like something like this. It came like this and go below like this. When you go like this, we know that this low here has been broken. So we call it a break of market structure. So when this thing happen, what do we do? What do we do? When something like this happen, what you do is that you go and look for this level here. Look for this level. So you are going to sell. Place your sell limit at this point. So you want the market to come back to that point and move downside. Where is your stop loss? Above this high. All right, that's your stop loss. Okay, so when the market goes above this level here, your next entry, you will enter again when market comes to this point. So you have two entry points, this one and this one. So after that entry, what is your TP? When is your TP going to set? Your TP is going to be here. First, here's your first TP. Okay, remember your entry point is here, right? So where is your TP? Your TP is going to be the previous low, which is this place. So after here, where is your next TP? The other low that follows it. Yeah, the next TP, the low, as in you go down from the lows to low to lows. That's your TP is going to be. I just use that to show you an example. So let us check what is happening on crash 500. Okay, I check on crash 500. You'll be seeing something very, very sweet. Now here is crash 500. Okay, here's crash 500, and you see my line, that this line would draw it in that video. It's already on the respect. It's already going on our favor. See that this line would draw in the other video, and it's still respecting it. Okay, so this one too is happening. What do we see here? This one is happening already. What do we see here? We see that there's an uptrend market going on here. So that this is uptrend market, because we are seeing highs. We are seeing lows, lows. So what happened? What actually happened? This is a low that's supposed to hold, but market came down, broke out at the low. It broke out the low like this. So we are actually expecting the market to come back where do we want market to come? So this high. I told you guys why there is our entry. See, that's our entry. And what happened? Market came back to it. It came back to it and shoot down like this. All right, shoot down. Now, why are we buying this market? Why are we buying in this place? Why are we buying this market from this point? You could see the lines I drew here. There is something happening here. This is a very strong level. So that's why we are buying there. Coupled with this psychological level that is around that point, that is why we are also buying there. Let us draw our Fibonacci. I drew this in the last video, so let me do it again so that you get what I'm saying. Very good. My Fibonacci level. So I need to get the point very well so that you two understand what I'm saying. Here's my highest high, so I will use my highest level as a case study. So I will use my highest level and also the lowest level down. So I'm going to go down to my lowest level here. That is the lowest low down here. So when I get to my lowest low, I'm going to be looking for something equilibrium and discount, because this is an uptrend. So this is just a deeper retracement, because if you check on the day on the time frame, you see that this is still uptrend. Okay, so this is just a very deep pullback on a 1 hour time frame. So if I take my Fibonacci and draw it from the highest line to the lowest line, I will find my equilibrium and find my discount. Then I will take my entry. So where do I take entry? I take entry on discount. Now where is my discount? If I calculate, if I come here, my discount is on level 50. This is level 50. My discount is my equilibrium. My discount is any level around below level 50 is my discount. And you will see here at this point here, the market has moved. The market has moved come to the discount level, moved a bit upward to the level of that 8.2 before it dropped down, go below 61.8 and enters near my psychological level of 600. That is this green line you see here. This green line is my psychological level. That is the safest entry point. Okay, but the market did not touch did not touch that psychological level, but it was very very close to it. So we are taking entry at that zone. This inside of that box is anywhere inside the box is where we are taking entry. So where is your stop loss? If you take the entry from that point, you are going to set your stop loss just below that box, somewhere here. Your stop loss. And what happened? Where's your TP? Your first TP should be at level of 50 equilibrium. The next TP should be at level of 38.2. Then the next level should be at level of 23. The next level is going to be at level 100, level 0 rather. Okay, and that's how it goes. So when it breaks out of this level here, then we are going to be expecting a more bullish moves. All right, I guess you get this point right now. You get what I just discussed here. Let us still do it on an empty chart. That is what are happening here. We're having a buy trade before the market come up, break this low here, break our low here. And where do we expect the market to come? This level. It come here, then it shoot down. And that what we are seeing here now. And that's what we are seeing here. We are seeing the market going up, seeing the market going up, down. After that here now, the market, sorry about this, we saw the market making moves like this. There is a move like this. We come this one, we get to this point, we get this high, we get this point, we get another high. Now and then we get another market that goes below this high, this low. Then where's our entry point? This place, and market come down to that point and shoot down. So that is the scenario of this pattern, and it works almost all the time. This is price action, and if you want to learn something like this more on this channel, go ahead and subscribe to the channel, because I'll be dropping something like this in the channel. So if you like this video, what you need to do for me is comment on the comment section, and we will be doing something like that. Now see another scenario here. See another scenario of such trade here again. We are having movement like this. See that, like this. So we should expect another low to upside, but that did not happen. What happened instead? We had the low is here. What happened? There is a break of that low. So when this low breaks, what do we expect? This is our entry point already. So this one now, we missed this entry point. We missed because we might be waiting for this to come back here before selling, but we missed it. It only came back to the broken level. So you see that you have 3 entry points, which is the broken level is your first entry. Your normal entry is this resistance level you are from here. The third entry is then the highest high is your third entry. See that? So that pattern works like wonder. It works so good. It works so good. So so you don't want to play with this kind of strategy. You go to your charts, find these levels, find. Now let us see another scenario here. We have seen that the market is going from here down, up and down, going up and down. It come here, it come here. Now what happened? This level here, this level here got broken out. And what happened? Where are my entry points? This level, and it came back to that point and shoot up. See that? This works most of the time. It works like magic. So go to your chart now and identify this point. Go and identify this point on your chart, and let us see what you could do with it. Go on your chart now and identify these points I just mentioned here on your own chart. Don't just watch it and go and sleep. Go to your chart, go to your chart and find it and see how it is playing out. Okay, now this is crash 1000. This one we are looking at buying this market for a long time. Yes, why should we buy in a long time? If we check on the 4 hour time frame, and should be going for the 4 hours time frame. Let me go to 4 hour time frame. 4 hour time frame. Now here we are seeing something happening in the 4 hour time frame here. This is why we are going to take this entry. We have so many things happening here. Here now we have so many things happening here. This is called rejection. Those weeks there, they are making this level a strong level. So we want the market to go up from here. Okay, that is what we are seeing in this market. We are seeing a bullish market, maybe to this trend line that's drawing, that goes like this. So we should expect the market to at least move up from there and go that distance. As simple as that. All right, guys, this is just the principles. If you learn this, if you learn this strategy, this principle of trading, then you are going to enjoy trading. You will lose less. You're going to take trade with an edge. Take trade with a reason. Take trade with an analysis, not just entering for entering sake. Okay, guys, this is it, guys. In the next video we're going to talk about something else, maybe other blog or mitigation blog and all that. So if you want to get those updates on that videos, kindly hit on the subscribe button and also share to family and friends, like the video and give me a thumbs up. HumbleFx. Enjoy.